After you go through and determine adjusted gross income, you come to the deduction section of the tax return. The standard deduction is located on line 12 of the 1040. This lesson, we will discuss standard deduction and how age and blindness can affect your deduction. We will also touch on taxpayers who are claimed as dependents. We will talk about the difference between standard deduction and itemizing deductions. A standard deduction is what a taxpayer gets taken off their taxable income when they're filing. If you take a look at the standard deduction chart here, you see that this deduction is $13,850 for single or married filing separately, $27,700 for married filing jointly or qualifying surviving spouse with dependent child, and $20,800 for head of household. It is important to use the interview sheet and the charts in Publication 4012 to determine the largest possible deduction. Let's say you're single and have about $9,000 in qualified expenses for the year. Instead of having to list everything individually, the IRS lets you file for the standard deduction, saving time for those who may not be self employed or may not have had large medical expenses that year. There are other instances where it makes sense to itemize, but mostly it makes sense if your itemized deductions are bigger than the standard deductions for your filing. The standard deduction is increased for those blind and or over age 65. The definition of blind is a person who cannot see better than 20/200 in the better eye, even with glasses or contacts, or if the field of vision is no more than 20 degrees. If a person is legally blind, they probably will not have a driver's license. However, the IRS states that they want a certified statement from an eye doctor. Some people are not allowed to take the standard deduction. Most commonly, married filing single whose spouse is itemizing must itemize. Yet another reason why married filing single is out of scope. Does not apply to married filing single spouse who qualifies as head of household. Tab F also has interview tips to help determine a person's standard deduction. As always, we are trying to determine the largest possible deduction, which will lead to the best possible refund for the taxpayer. The reference for this slide is Publication 4012, Deductions tab, Standard Deduction Worksheet for Dependents. A person can only be claimed on one tax return. A person cannot claim a deduction for himself or herself if that person is a dependent of another taxpayer. Being a dependent will lower or at least may limit the amount of standard deduction allowed. It's very important that you ask questions during the interview process about dependents in someone's family. If a person is claimed as a dependent but takes the regular standard deduction, either the return of their parents or whoever claims them could be delayed while the IRS investigates. The last return filed will not be able to be filed. Ask about the "Can someone claim you as a dependent" checkbox on the intake form. Ask additional questions and explain the repercussions. We just want to clarify as much as possible and educate people on the process. Here's an example. My 16-year-old daughter earned $800 working in a part-time job. Add $400 per the worksheet, $1,200 on line 3. Line 3 is larger than line 4, so line 5 is now $1,200. She is single, and the smaller of line 5 and line 6 is $1,200. Since I claimed her as a dependent on my tax return, her standard deduction is only $1,200. Taxpayers have an option to choose the standard deduction if they have certain types of large out-of-pocket expenses. For example, large medical and dental expenses, paid mortgage interest on a home, or paid real estate taxes or personal property taxes. These may not always add up higher than the standard deduction, but we should enter those expenses anyway. Some of the expenses may not be a benefit on the federal return, but could be a benefit in the state return. We will do our due diligence to help our clients by entering their expenses regardless of whether they are larger or smaller than the standard deduction. We'll go over itemized in a later lesson. In summary, we just learned about the standard deduction and how it is effective. We are all going to interview our clients so that we can help determine the largest deduction allowed. Let's go over itemized deductions next.